Okay, last week I showed some new charts. I'm going to include in every weekend edition of EWP screenshots. These are good for a quick glance at the markets, especially in the areas of the stock market, the bond market, and you can at a glance, I believe, look and get a pretty good idea of what's going on. I'll show you what those charts look like this week and describe how I developed them and what to look for in those charts. So I'm going to turn off the video itself. We'll be off and running. So these charts are in a grouping that I call TSP Funds. So TSP stands for Thrift Savings Plan. And the Thrift Savings Plan is a huge, essentially retirement savings plan for U.S. government workers. So many U.S. government workers save via their thrift savings plan, and it also acts as their retirement and nest egg, so they're able to continue with it after they retire. And there's really only a handful of choices where they could put their money or distribute their money within the thrift savings plan. And the most popular of those choices would be number one, VOO, which is Vanguard's way, their ETF way of mimicking the S&P 500. VXF, which is basically an index that really only includes the small and mid-sized stocks. So this would be something more akin to the Russell 2000. VEA, this is represents global stocks, but not emerging markets. This is developed countries. So these stocks would be European stocks, Canada stocks would be the two largest participants in this particular ETF. And it's a way to look at how the stock markets around the globe and other diversified countries outside of the US are generally doing. BND is their total bond market fund. You'll see that this all these are weekly charts, by the way. It pretty closely mimics TLT, which we cover on weekly chart all the time, every week for you. And then VGSH, which is short-term treasuries. This basically represents the closest thing to going to cash that TSP investors, the closest thing to going to cash that they have as a choice inside their portfolio choices. And I put this percentage move of only 4.9% from 59.55 a share to 62.47 a share as an example of a swing that took over a year and it still only moved about 4.9%. So this is very conservative, slow moving, but it still can be charted, and we can use this chart template on it to give us some indications of what's going on. So what is that? And then two other ones that I've taken added here that aren't included in the TSP, but would give TSP investors kind of a overall look at a couple of other important things associated with the markets. And this is the PowerShares commodity index that lets you know what's happening with commodities as a whole, and then also the US dollar index. And so what I've done on all of these is I put weekly candles on these, because I think a lot of these retirees, they really don't need to be looking at daily charts necessarily, but they want to, obviously keep tabs on what is happening, maybe on a weekly basis. And so And there's three basic indicators that I've placed on all of these charts. One is the adaptive moving average. That's Perry Kaufman's adaptive moving average. And I'm also using a template that, based on what the adaptive moving average is doing in relationship to price, it creates these green buy zone boxes and these pink sell zone um, um, windows. So this is once you get into a pink box, you're in a sell zone. If it changes to a green box, you're in a buy zone. So everything in the upper part of the chart is all associated with Perry Kaufman's adaptive moving average system, and I've also adapted the boxes to make it real obvious what's going on with that indicator. And then I've also placed just a basic MACD. MACD is generally a fairly slow and moving indicator, but when you do get crossovers of the MACD line with its moving average line, the 9-period moving average of the MACD line, you get, I have it showing you signals, sell signals and buy signals. And then the bottom one is the one I developed last year. It's an RSI. By the way, J. Wells Wilder created the MACD and the RSI. So the black line down here is an RSI. The blue line is a money flow indicator, which is a basic RSI, but it is goosed or affected by volume. So if you see, for instance, the RSI moving up, but the blue line, the money flow index moving up much stronger, there's quite a bit of volume behind the move, which generally has a tendency to kind of keep it moving to the upside. Whereas there are other times where the MACD line right here it's the black line that turns red or dark red up here if it gets overbought. It was leading the money flow line, and so the money flow or the volume was starting to lag, and was a warning in January 2018 of a top. And that top ended up being a fairly important top because the entire year of 2018 was pretty much a sideways and down year. But I've also color-coded some items on some situations on this indicator down here, the RSI versus money flow index indicator. If the RSI is overbought, you get dark red. If you get varying shades of red and pink when both the RSI and the money flow indicator are overbought, and you get varying shades of green when they're oversold. And so many times, not always, but many times when you've been overbought, like we've been lately, when both indicators exit overbought territory, then I place manually a pink line. And we just got that on last week. So last week's candle presented a situation where both the RSI and the money flow index have exited overbought territory. Also, notice I put a pink line on the last MACD crossover sell signal. So we really have two pink lines in a row. And what would it take to get a third pink line? Well, it would take the beginning of a pink box. And I can tell you we're not going to get that third pink line until we get a weekly close. And this is approximate, a weekly close below the adaptive moving average line, which is currently at 384.42. And we're price, even though we had a bearish close to the week last week, price is still well above that line. But when that happens and we get a weekly close currently, and that number will gradually change each week a little bit as the adaptive moving average moves around. But when that happens, that will be 3 strikes. So in baseball, in the US, 3 strikes and you're out. So that will give us 3 pink stripes and the beginning of a sell box. So the 2 stripes, the pink stripes, we've already gotten our warning signs. And that's why I say if it moves on down and we get a weekly close below 384.42, that will likely trigger a new sell signal on the S&P on a weekly chart using these indicators. One additional thing I've shown, I've placed on a few charts this week is seasonality, because I think it's becoming quite important about now. There's a website called equityclock.com, and equityclock.com has a free PDF you can download, and I have that on my hard drive. And if any of you would like to send me an email and ask that I email it to you as an attachment, I'd be happy to do it. But what this shows you is historic periods of bullishness in a number of items, stock market, bonds, US dollar index, some sectors, some specific industries, and some specific commodities. It's just a 2-page PDF. And because I don't use seasonality extensively, but I want to be aware of it generally, I've taken some of these dates and applied them to some of these parts for these charts for reference. And so on the S&P 500, the period between May 5 and October 28 is generally not a bullish period. We'll just say it's not a bullish period. Bearish might be too strong of a word, but it's not during its bullish seasonality. And notice that on the Russell 2000, that extends that kind of bearish period starts March 4 and it goes all the way to November 23. But on the NASDAQ, the bullishness that we just seen just ended, and there's a period of bearishness from July 17th through October 9th. So there's a window of seasonal bearishness that we've entered into right about now that would be universal across all stock market indices. And it is no surprise that it's during this kind of bearish seasonality on stocks that we get a bullish seasonality on the volatility index. So the volatility index has bullish seasonality from July 3rd through October 9th. No surprise that it would be exactly opposite there. It's same with Treasury bonds. There's a bullish period on Treasury bonds from May 12th through October 7th, and that pretty much corresponds with this area that we often see each year, some stock market weakness. And we'll just say for now, it's in the last index showing any kind of bullish period, the NASDAQ just ended July 17, and things look bearish on the stock market from a seasonality standpoint till October 9. So that I've taken some of those just generalities, and I've applied those onto some of these charts, so you can see that we have been in a bearish period theoretically on the S&P starting May 5th, and that should last all the way to October 28. And the reason I'm bringing that to your attention is because as we move through these charts, we'll see there's definitely some weakness showing. You don't see it much on that S&P chart, not on a weekly chart. You don't see it, but on the next chart, the VXF, this is the fund they call the S Fund inside of the Thrift Savings Plan. And it represents small and mid-sized stocks. So this is more like the Russell. And the chart looks very much like the Russell. And that is that pretty much topped back in February and has been moving sideways ever since. I do think it's interesting on this chart, and I'm going to change it to a daily, that on this particular chart from an Elliott wave standpoint, this could have been, the top of wave 3, this the top of wave 4, and this could have been an ending fifth wave, an ending diagonal for a fifth wave. 1, 2, 3, 4, 5. And notice that this did make a slight new high above the February high, which actually in the Russell it did not do. But in this index, it kind of gave what kind of a clear picture of a potential ending diagonal that finished in late June. And the first thing one would expect after something like that would be a return back to the wave 4 of one lesser degree from Elliott wave standpoint. Put it back on the weekly chart here for you. But here's why this chart is so important right this second, is it shows you clear as a bell that the market, the stock market, whatever gains the stock market's been having have been in the large caps, the S&P. You look at the small and mid caps, not only have they been much, much weaker through the balance of this year, but now with the movement down last Friday, we're moving down and are closed just barely above the adaptive moving average line. So the question is, are we about to get 3 strikes and you're out on this? Well, the first pink line right here is when we first exited overbought territory on the money flow versus RSI indicator. The second pink line occurred, and that pink line occurred back in late February. And then in mid-March, we got a MACD crossover. And notice the MACD has been making its way to the downside ever since, and it's still open. Those moving averages are kind of widening up and heading down. Alan asked, do I know if the S&C funds are weighted? And I would have to say that they're weighted identically to whatever index that they're, whatever they're indexing. So on the S&P, it is weighted. On VXF, because this looks so very much like the Russell, I'd say it's built the same way as the Russell, which I believe is weighted. It's just such a much larger group of stocks. And so the largest stocks, the most expensive stocks, are not going to have as big as an effect on the Russell, for instance, or on a larger group of stocks than they are on the S&P, which is still a large group of stocks, 500 stocks. And I'll have more information for you later in the webinar. It's just incredible, record-breaking business when it comes to breadth and an all-time high on the S&P. I'll show that to you after a little bit. Anyway, so this is within an eyelash of giving the third pink stripe, a weekly close below the adaptive moving average, which you can always look up here and get the adaptive moving average price, 179.23. And we closed at 180.42. So we're within an eyelash of closing below on a weekly basis the adaptive moving average, and that would very likely start a pink sell zone box. And so the majority of the stocks in the stock market are just about to offer us a sell signal on a weekly chart, and that's really looking for a lot of confirmation. 3 strikes and you're out. Another thing that I've noted on this is the massive bearish divergence showing on the RSI indicator between the high back here in February and this slightly higher high on this item in early July. So, and then we are toward the middle of the bearish seasonality, which in the Russell and small caps generally lasts all the way to November 23 on the on the S&P only through October 28th. So we are kind of in the mid section of a kind of a bearish seasonality here. And then this one, the VEA, is the I fund, and it is, as I had mentioned before, mainly European and Canadian stocks, developed country stocks, but no U.S. stocks. And you can see it closed at 50. The AMA line closed at 5107, and so did this item, 5107. So any kind of weekly close that's any lower than this week close will very likely get another pink line. And you might go, well, you've only got one pink line here so far, but that pink line really counts as two because it's a sell signal on the MACD, and this indicator was the one candle after exiting overbought territory. So this pink stripe acts as two pink stripes. So the third one, we're with an absolute eyelash of seeing. So the global stocks are showing some weakness. The majority of the stocks that are available for investing in the U.S. are showing weakness and almost on a weekly sell signal, and only the large caps have held this thing up. Specifically, a lot of the two of the large caps that are holding this thing up, Apple and Amazon. I've done quite a bit of additional work on those two stocks this week, and I have daily charts on those to show you with the current Elliott wave count on those, and that's coming up in the webinar. Okay, the bond fund. Now we got our three strikes in three bullish strikes in a row here on the bonds, where it exited oversold territory back in April. And then we forgot the beginning of our first green box, buy zone box, in late April. And then we got a MACD crossover here in mid-May. So it's been on a three strikes and you're out buy signal, or three strikes and you're up, I guess, since mid-May. And you can see it's been working its way higher. The MACD is still on a weekly chart wide open, in getting wider. The last histogram bar is higher than the prior. So these histograms are getting taller. That means the MACD is widening out, and this is bullish. The slope of the adaptive moving average is green, and price is nicely above it. That's bullish, and the RSI is generally making its way to the upside, and it's not an overbought territory yet. So all three indicators that I use on this weekly chart are currently on a buy, and none are really showing any weakness yet. And therefore, I would have to say that the bond market appears to be positioning for a stock market correction. I know the talking heads on CNBC, one of the talking heads this week was that old fellow they occasionally bring in once in a while, Art something. Anyway, he was talking about how if bonds don't stop going up, in other words, if yields don't stop going down, that is bearish. That is going to be considered to be bearish for the stock market, and I agree with that. And he also talked about the seasonality. We're just exiting the last, bastion of bullish seasonality in the NASDAQ, and so we're really in a period that is traditionally not so hot on stocks, and that would be from the middle of July on through September. And he mentioned in his comments that there's many stock market bottoms that have occurred historically in the month of October. So the seasonality is just moving into bearish time frame. But right now, bonds, there's nothing on this chart indicating that they aren't bullish, and that would be bearish for yields. And then finally, on the Treasuries, the safest haven thing you can invest in on the TSP, look at what's been happening lately. We've got a MACD bullish crossover. We have an exit of oversold territory. And so and there for just one little minute, we got a little green box. And so that would have been enough to fire a buy signal. But then we had one more little trip down here. And so we have a price making a new low here, but look at what the MACD is doing. It's showing bullish divergence. So I would say any close above the adaptive moving average, which is currently at 61.51, and this item closed at 61.46 for the week, and that would likely trigger a buy signal on treasuries, and I believe that would suggest a trend change from risk on to risk off in the market. So this is also very close to firing as well. So we're gonna have these all in their own folder called the TSP Funds folder every weekend for anyone from the basic plan on up. So basic, pro, and premium will all receive access to that. I'm considering maybe making that part of the trend plan and doing a big marketing push to try to pull in for $25 a month, some retirees that would like a completely technical, independent look at the markets, no fundamentals, no talking head, a perma bullishness or anything like that. It's what's on the chart is on the chart. And right now we're seeing bad breadth in the market, in the stock markets. We're seeing a movement into bonds, apparently, out of stocks, and we're within an eyelash of seeing a buy signal on actually just almost the same as going to cash in these markets. So one quick, I didn't want thing, we're going to include these additional charts. This is the DB PowerShares commodity index. And one interesting thing I'm seeing here is it does look like a 5-wave up structure, and it looks like it's running out of steam up here because the week before last we got a MACD crossover, and we also have the RSI and money flow indicators moving out of overbought territory, and we're seeing divergence on those indicators. So we're seeing a bit of, we've already got 2 strikes. If we get the 3rd strike, which is a close below 1847, that will trigger a sell signal on commodity, on basically the commodity group. Obviously, this item is probably skewed pretty, to crude oil, because gold and silver have been in downtrends since August of last year. So this is kind of an overall look at commodities, and I think would be a pretty decent way of looking at inflation. And then one last thing is the US dollar index, and you can see that down near these lows right here that occurred early in the year, around early first week of January. And that, why does that say May 29 buy? That should say, that should not be there. Hang on a second. That should be right there. Is that May 29? No. I'm going to take that off for now until I think about that. But anyway, we got a MACD crossover after bullish divergence back on January 29. And then we had a start of a green box right here. And the low for the year is still standing from the first week of January. And isn't it interesting that bullish seasonality generally runs from January 1 through March 31, and it's amazing how often that first quarter is bullish on the US dollar index, and it was again this year. Currently, we're on buy signals. The MACD is on a positive crossover. The RSI is on its way up. We're in a green buy zone box. And so all indicators are currently on a buy on the US dollar index, and there's really no sign of immediate danger to that uptrend. There's what I think is a really effective quick glance that you can use every weekend to make some decisions in your retirement portfolio. And there's, I would say that those choices in the TSP funds are similar to a lot of choices that people have in their retirement funds, very similar. And that might help people do a little bit more balancing and timing inside their investment portfolios rather than sitting through massive periods of drawdown. And all based on technicals, no talking head BS. So anyway, that's something that I've added to the service. I hope you enjoy it. I think it's going to be really meaningful, and I think it's giving meaningful information about the markets right now.